The Reserve Bank of Australia decided to cut the interest rate by 25 basis points earlier this week. But is there more on the way potentially? There's some differing views about that. Joining me now is independent analyst Evan Lucas. So Evan, a rate cut, we got that. It was the second one this year. But is there more on the way? And if so, how many could there be, do you think?
Yeah, good morning, Kenny. Again, I think what caught most people by surprise wasn't the cut that actually happened on Tuesday. It's just how big a change in their view to the downside that the RBA was. And now, basically, in the last 24 hours, pricing for the expectation of Christmas is for 2, with the possibility of 3 rate cuts to be done. Before Tuesday's meeting, it was only 1 with a very, very slight chance of 1 more. So that would mean that would be 5 rate cuts in 2025, considering we've already had 1 in February. And now, if that was to become the case, Kenny, the average mortgage in Australia sits at $666,000. And that would mean that if we see all 5, that would be a saving of just over $5,000 in interest repayments per annum. And that is a bigger movement than the stage 3 tax cuts for the average Australian got with the changes to stage 3. So it would be a massive, massive boost. It would mean overall in the last 2 years, households would have saved $10,000 in either tax or interest if this comes to fruition. So it's a big change and has certainly caught a lot of people off guard with how sort of strong wording to the downside it was.
Evan, could there be unintended consequences from these rate cuts?
Yeah, there is. And I think that's the other part of this. I mean, Michelle Bullock was at pains to point out that she is doing basically fine art with a sledgehammer. I mean, interest rates, as I just described, are very, very blunt and they are widespread and indiscriminate. So the unintended consequences from your question, I think you're asking is, we have a housing market that is still pretty robust and pretty strong. And we're stimulating that by allowing credit to flow higher. Plus, 2 weeks ago, we just saw the federal government introduce their new 5% deposit for first homeowners and the 15% guarantee. So 2 demand products into a housing market already strong. The RBA is trying to stimulate the rest of the economy, but the unintended consequence is that it drives housing even further out of most people's reach.
Okay, Evan Lucas, appreciate that. Thanks so much.